Hello and welcome. You're watching Market Cafe with me, Ankita Saxena, and with me is making her Market Cafe debut is Lisa Fernandez. Hello and welcome, Lisa. Very good morning to you.
Well, a good morning, Ankita.
So this is a show where we take you through the roundup of what made headlines on the global arena, the global market roundups, and the stocks that can move the markets in today's trading session. But first up, there is a big news coming on the domestic front in a significant move in the field of global trading in India. The popular SGX Nifty has been rebranded as GIFT Nifty, and all the derivative contracts worth $7.5 billion earlier traded in Singapore will shift to India from today. Now, the beginning of the operation of GIFT Nifty is a major step in the shifting of the base Singapore exchange to the NSE International Exchange in Gandhinagar, Gujarat. My colleague Ankur Mishra is standing by at the location to get you all the details. Take it away, Ankur.
I think it's a great moment for India, especially for GIFT City. It's the prime mover of the GIFT City because any financial services center needs to have a good market, and this is going to be a market which is going to run almost 22 hours a day. Set up the prices in the morning for India, what India will trade at, and that's where I think every one of you and me and everyone will look at this market going forward. Today being the first few minutes of trading from Singapore, I think it has gone very smoothly. People were very apprehensive what will happen when you place orders in Singapore, but it matches in GIFT City, Gandhinagar in India. It was all kind of a sci-fi activity in people's mind. Now it's happened, it's magic, and that's how I would put it, that it's a beginning. A lot of scope for traders from within GIFT City also now to place their orders, match, of course, the Singapore where the traders are coming from all over the world into Singapore, that will continue. But now even traders from GIFT City will also be able to participate in these markets. More algo traders, more banks, more custodians. Everyone is now going to come into the GIFT City, and that's what our purpose was.
We also have Mr. V. Balasubramanian, sir. Congratulations for this historic listing. What are the advantages which traders will have now in terms of various tax benefits, and what are the products which are being listed currently?
Thank you. So in terms of the products, I think as part of the SGX Connect, we have got the entire GIFT Nifty series, which covers 4 products, which includes the Nifty 50, the benchmark index, also the Bank Nifty, the IT Nifty, and the Fin Nifty product. And in terms of benefit to traders, I think we are going to now discover price at our home. So effectively what we have done is we onshored the offshore. And effectively everybody can now look at our own markets to see that the price setting is happening from our own zone here.
Mr. Chauhan, how good is this for India's story after now Singapore, the base is India?
No, I think overall India has been looking good for last several years, but in some ways it's an inflection point. This has come at an opportune time for India too, where we are onshoring what had gone offshore. But more importantly, we are doing it in a more inclusive way, that what is there in Singapore, we are protecting it, we are promoting it. In addition, we are inviting the rest of the world to come here to GIFT City and trade. So it's a great way, what Hong Kong did for China over last 40 years, that Hong Kong was the gateway of the world to invest into China, and that's how China grew. For me, the GIFT City would be playing a similar role of attracting capital for India's growth from rest of the world, and that would be invested in India, creating huge number of jobs going forward.
Right, so it is trade through India. That is what the message which is coming through the management of NSE. We have seen that the trading has already started. There are tax benefit for NRIs. There is also advantage if you set up a subsidiary here. But the bigger news here is that GIFT Nifty is active now.
All right, GIFT Nifty is active now. That's the big news coming in on the Indian markets. But let's quickly go across and see how the US markets fared on Friday. Well, on Friday, Dow Jones Industrial Average was up 0.8%. The S&P 500 rose 1.2%. The S&P 500 had a positive end to the first half of the year, gaining 6.5%, for its best monthly performance since the month of October. It rose 8.3% for third straight quarter of gains and its biggest quarterly advance since the fourth quarter of 2021. Now let's look at the Nasdaq index. Nasdaq index has been inching up on the back of strong gains coming from the tech majors. Nasdaq was up 1.4%, had its best start in 4 decades. Those gains, of course, as I mentioned, came in as enthusiasm around artificial intelligence boosted the tech stocks. Recent data also showed a rather resilient US economy despite higher rates, also lifted the consumer sentiments and easing some of the fears on Wall Street of a long-awaited downturn. The stocks kicked off a shortened trading week today with the market closing at 1 p.m. ET for the Independence Day holiday. So it will be a shorter day of trading in the US markets as of today. Now, investors will pore over the latest ISM manufacturing PMI and S&P Global manufacturing PMI data for the month of June as of today's trading session ahead of Friday's keynote jobs report. Now let's go across to the European market. The European stock markets closed higher on Friday and notched strong first half gains in a resurgence that came despite interest rate hikes and banking failures. The Pan-European Stock 600 closed 1.2% higher for the session, with all the sectors and major bourses in the positive territory. Now, over the first half of the year, the index ended up roughly 8.8% higher. DAX was up 1.2%, the FTSE was up 0.8%, and CSE was up 1% in the trading session. Now, it comes as the Eurozone inflation data fell more than expected for the month of June. The figure came in at 5.5% for the month of June, indicated that fiscal tightening of the European Central Bank could be starting to have desired effect. And the core inflation, which excludes food, energy, rose, however, coming in at a good 5.4%, I beg your pardon. Now let's look at how the crude fared, Lisa. That was a roundup of the global markets, a positive handover coming in from the Europe and the US markets, but where is the crude at?
Well, if you're looking at the WTI crude oil, that's at around $70.49 per barrel, and the Brent crude oil is at around $75.25 per barrel. But if we look at the quarterly gains, loss, it has been at a fourth straight quarterly decline, and investors are quite worried about the sluggish global economic activity, and that could crimp the fuel demand going forward. Also, the prices have been under pressure, and that is because of the rising interest rates and also the slower than expected recovery in the Chinese economy. But that has been offset by the strengthening US economic activity and also sharp declines in the US inventory. So that's about the crude data for today.
All right, Lisa, let's quickly take you through all the events that we will be tracking very closely as of today. In the global arena, we have the US PMI data that will be coming out. We also have the OPEC International Seminar that will take place today. We have the US initial jobless claims data that will be coming out, and the FOMC June policy meeting minutes that will be coming out. That is something that the street will be watching out very closely. And for the week, there are a couple of AGMs that will be in focus. First up, for the 4th of July, we have Tata Elxsi. For the 5th of July, we have Tata Steel and CEAT that will be holding its AGM. On the 6th of July, we have ICICI Lombard, Coforge. And on the 7th of July, we have Bank of Baroda that will be holding its AGM. So that is a roundup of all the events that we will be tracking very closely through the week.
Well, the news flow from the US that we are tracking this morning, the Treasury Secretary Janet Yellen will be traveling to Beijing, and this week they'll be meeting with the senior Chinese officials. Well, a slew of matters on the agenda for this meet, macroeconomics as well as the financial issues to US-China ties and how best to better them in the face of global challenges.
And Elon Musk has announced major changes on Twitter. A temporary limit has been applied on how many tweets a user can read in a day. Verified accounts will be allowed to read 6,000 tweets per day, whereas the unverified accounts have been restricted to only 600 tweets. Meanwhile, new accounts will only get to read as many as 300 tweets to begin with. The move announced with among efforts to prevent data scrapping and system manipulation.
And global car maker Tesla's deliveries as well as the production figures for Q2, they have topped their estimates. The deliveries for the car maker rose 8% year-on-year to as little over 4,66,000. Now, this marks the fifth Q2 in a row that the company reported higher vehicles produced versus the number of deliveries. Production stood at 4,79,000 units as the company ramped up production at its Austin plant in Texas.
And Apple is now the first ever company to hit the $3 trillion in market cap ever, as its shares climbed 1% in trade. But this is not the first time it has happened. In January 2022, the iPhone maker managed to hit the same in market cap but failed to close at the same level. And it has got another chance to do so.
Well, in other global news, Spotify technology is testing the inclusion of complete music videos within its application, potentially enhancing its ability to rival Alphabet's YouTube as well as ByteDance TikTok in the streaming service market. Now, according to reports, the company has initiated discussions with partners regarding the potential product with the intention of adding full-length music videos to its platform.
Well, at least 30 people were injured and 2 fatally when the gunmen opened fire at a block party in US's Baltimore. The shooting took place amid gatherings around the country leading up to the July 4th holiday. No arrests were made immediately after the shooting. Meanwhile, authorities said that the crime scene was extensive and it will take some time for the detectives to work.
And in a weekend shocker in Maharashtra politics, the NCP's Ajit Pawar, he took oath as a deputy CM of the state yet again, but this time as part of the NDA government led by Eknath Shinde and Devendra Fadnavis. Now, in a surprise move, Ajit Pawar has reached Raj Bhavan on Sunday, claiming support of 40 out of 53 MLAs of NCP. Party founder and Supremo Sharad Pawar said disciplinary action will be taken against those who have jumped the ship, and he took a dig at BJP, saying that at least investigative agencies will not harass those rebels now and cases against them would be dismissed. Now, meanwhile, Ajit Pawar, Chhagan Bhujbal as well as senior NCP leaders, they have pledged their alliance to NDA government, and he praises on PM Modi.
All right, then with that, it's time for us to slip into a short break. But before that, let's quickly mark the GIFT Nifty. It has been labeled GIFT Nifty, and the GIFT Nifty as of now is up 0.4%, up 83 points. It is indicating towards a positive start for the Indian markets. As we can see on your screens is the new GIFT Nifty. And with that, we'll slip into a short break. Don't go anywhere. After the break, we go domestic. Welcome back. You're watching Market Cafe with me, Ankita Saxena, and with me is my co-anchor, Lisa Fernandez. Let's, before we begin with the rest of the news flow, let's quickly take a market check. The Asian markets have opened up, and they have opened up in the green as investors are digesting a slew of manufacturing activity reports from the region. China's CAC Manufacturing Purchasing Managers Index will be released later in the day. Now, the economists polled by Reuters are expecting to see a slight expansion despite official government readings recording a third straight month of contraction. Now, if you look at your screens, Shanghai is up 0.6% in trade as of now, and in the Asian Pac, Hang Seng is up 1.6%, but the day started with the Nikkei leading the pack. It was up 1.4%. Kospi also up. Kospi is also up 1.5%, and so is Nikkei. Nikkei has inched up from its day's start, and also we have the private service for factory that will be coming out today. And let's mark the GIFT Nifty as well. It is up by 82 points, 0.4% up, indicating towards a rather positive start for the Indian markets as well. Moving on to some more macro data, India's fiscal deficit for the first 2 months of this fiscal year through May stood at 2.1 lakh crore rupees, or 11.8% of the annual estimates. And the fiscal deficit narrowed from 12.3% reported in the year earlier. Total receipts stood at 4.16 lakh crore rupees, while the overall expenditure in April to May was at 6.26 lakh crore rupees. Now, they were 15.3% and 13.9% of this fiscal year's budget target.
And now, 6 years post its launch, GST has become a game changer for the Indian economy. Rupees 1.5 lakh crore monthly revenue collection, that has become a new normal. And according to the latest data, collections came in at 1.6 lakh crore in June. We have with us Prakash Priyadarshi, who is analyzing the hits and misses of the new tax regime and also the challenges going forward.
Launch on the midnight of July 1st, 2017, the Goods and Services Tax has acted as an engine for driving domestic consumption and helped households save on monthly bills. Since then, the number of registered taxpayers has increased to 1.36 crores in 2023. Monthly GST collections has reached a maximum of rupees 1.87 lakh crores in April 2023. Pre-GST, it used to be between rupees 85 to 95,000 crores.
GST Council has undertaken various reform measures in terms of simplification of the process and rate rationalization in last 6 years, and the results are visible on the ground.
Finance Ministry claims that GST has brought in savings for every household on their monthly bills. Prices of essential items like wheat, rice, curd, lassi and buttermilk have come down due to the removal of taxes, whereas the daily used items like milk powder, edible oil and spices taxes have come down to 5% from 6% earlier. Apart from that, GST on various items have been rationalized over the years. But the committee constituted for the rate rationalization is yet to undertake many required rationalization measures under GST. Also, the issue of technical glitches in GST network is still causing hurdles to the traders.
It has become the most objective taxation system in India, and it is benefiting the trading community because more than 70 types of taxes and 13 types of cess have been included in GST. What we urge the government to have a fresh review of entire GST system based on 6 years of experience and make it a simplified and rationalized taxation system which can easily be complied with even an ordinary trader.
Other challenges before the government is the fake registration. GST network has identified over 60,000 entities which could be having fake registration. Over 11,000 fake GST registrations involving GST evasion of over 15,000 crore rupees has been detected. GST authorities have arrested 1,402 persons for evading taxes between July 2017 and February 2023. But despite all these challenges, government expects that the average monthly revenue collection from GST will soon cross the rupees 2 lakh crore mark.
Tax on tax had actually taken many of the goods to well over 31% in terms of taxation. And that time, with all the desire to have one taxation in the country, we still didn't think that that was outrageous and named that tax as anything, like the way in which we hear some leaders telling us about GST being a burdensome tax. But what system prevailed earlier was indeed burdensome in that a tax on tax had added on to the burden. And I'll show you with a few figures to show how the introduction of GST has actually brought the net actual tax on the consumer down, and in some cases remarkably down. And despite this reality, you still have a lot of people confusing the minds of the people, saying GST has actually burdened the society. Actually not. And therefore, it is necessary for all of us to recognize this tax its importance in making sure that it, on the one hand, does justice to the consumers in having brought the rates down and having removed the double taxation element, and on the other, making sure genuinely what the governments will have to earn in terms of taxation is being collected systematically without any personal level discretion.
Right, and brace yourselves for a stormy monsoon session of the Parliament, which is set to begin on July the 20th. The Parliamentary Affairs Minister Prahlad Joshi said that the session will commence on the July 20th and will continue till the 11th of August. Now remember, the session comes just weeks after the Patna meeting of opposition parties, which the BJP dubbed a photo op.
And now slipping into a short break. More news and updates on the other side of the break, so stay tuned.
Welcome back. Here watching Market Cafe with me, Ankita Saxena, and with me is Lisa Fernandez. Well, SGX Nifty, that has been renamed as GIF Nifty. Let's look at how it's faring. Well, it's up 0.3%. It has eased off the gains that came in the morning. It's up 75 points as of now. But if you look at the US futures are absolutely flat, but it hints towards a rather positive start for Indian markets, as we did see a positive global handover also coming in.
Well, that's the end of an era as the HDFC group subsumes its NBFC behemoth into its bank, and this will create the world's fourth largest lender in terms of market cap, just after the likes of JP Morgan, ICBC, as well as Bank of America. But more importantly, the chairman Deepak Parekh, who has played a crucial role in the success of HDFC, he will hold a executive role in the new entity. Now, what is the legacy he is leaving behind and what's in store for the merged entity? Take a look at this bureau report.
Deepak Parekh built Housing Development Finance Corporation into India's most formidable home loan lender. As the curtains come down on HDFC, which merges with HDFC Bank, it marks an end of the era for the man who left a high-paying job at Chase Manhattan Park in the 70s to join his uncle to start up the first mortgage lender in the country. Deepak Parekh joined HDFC in 1978, about a year after the company was founded by his uncle H.T. Parekh. The senior Parekh started HDFC in 1977 amidst India's somber economic backdrop dominated by the pre-liberalization culture of license arbitrage. This was the time when most Indians could only dream of owning a home, and EMIs or floater rates were still esoteric concepts and didn't exist in India's financial landscape. It's also an irony that ICICI, then known as Industrial Credit and Investment Corporation of India, was the first investor in helping the setting up of HDFC along with International Finance Corporation and Aga Khan. HDFC clearly had a first mover's advantage in operating as a mortgage lender in the country, especially when banks mostly didn't disburse home loans. In those times, HDFC revolutionized mortgages through some innovative financial structuring by Indian standards that allowed the middle and working classes of the nation to feel more comfortable borrowing money from a lender to buy a home. Deepak Parekh was a key figure in the growth of HDFC through the late 70s and 80s, when the company listed its shares and raised further equity capital and financing lines from international finance institutions. Mr. Parekh succeeded H.T. Parekh as HDFC's chairman in 1993, even as the Reserve Bank of India was mulling on allowing the private sector to enter commercial banking for the first time since the nationalization of key banks in 1969. Mr. Parekh was instrumental in the founding of HDFC Bank in a partnership with UK's NatWest Markets in 1995. Mr. Parekh brought on board Aditya Puri, a dynamic city banker.
And well, after the merger of the HDFC twins, Shashidhar Jagdishan, who is the MD and CEO of HDFC Bank, said that the aim is to create one HDFC Bank in every 4 years, given the lender's comfortable position in terms of capital and profitability. In a letter to the bank's employees, he added that this merger will be a paradigm change of how business will be carried out in the future. He said that this power of bundling will be a game changer for the bank, and they will add 1,500 plus branches every year for the next few years. He said that the bank will set up a grievance committee to hear any vows that employees have, and added that compliance and governance and customer service were going to be the key focus areas of the bank going ahead.
Well, at the GHCL AGM, the shareholders have rejected the appointment of Chairman Sanjay Dalmia as the director. Anurag is joining us with some more details on this. Over to you, Anurag.
The shareholders of GHCL, which is one of the biggest soda ash chemical makers in the country, rejected a resolution on Saturday for the reappointment of the chairman Sanjay Dalmia as the director of the company. This development came as the shareholders approved all the other resolutions before the annual general meeting, including the payment of dividend to the shareholders. Now the resolution was defeated by a very thin margin. About 68% of the shareholders voted for the resolution to appoint Dalmia as the chairman, while 32% voted against. Now the resolution to be carried at the shareholders meeting needed an approval of at least 75% of the votes, which it could not get. GHCL in a statement said that it's going to abide by the decision of the shareholders meeting, and that at the last board meeting of the company on April 29, Mr. Dalmia had expressed his desire to retire, but had stood for reappointment at the shareholders meeting on the insistence of other board directors.
And well, it's time for us to slip into a short break. Don't go anywhere. After the break, we get you more stock-specific action. Welcome back here, watching Market Cafe. Let's look at how GIFT Nifty is faring. SGX Nifty, that has been renamed GIFT Nifty, is currently trading 0.3% up higher. Well, it has eased off a bit of gains that came in this morning, but still up 73 points as of now. And well, we'll move on to my colleague Harsh, who's here with us in the studio. He has all the details of all the stocks that you need to keep on your radar. Harsh, tell us, what are the stocks that we need to watch out for in today's trading session?
Right, Ankita, first off, the big one is Vedanta that we'd have to look at, because the company has initiated a strategic review of its businesses. They want to unlock stakeholder value, so that'll be in focus. We're also looking at Granules India. The company's Unit 4 facility located in Visakhapatnam has successfully completed US FDA pre-approval inspection. Mazagon Dock continues to win orders, and its raining orders in that space continues to do that. 2,700 crore odd of orders for Mazagon Dock. NCC also winning orders worth 2,100 crore for the month of June as a whole. AB Capital has successfully completed its fundraise, roughly 3,000 crore QIP. AB Capital continues to be in focus on the back of that. That's a positive. We have Lemon Tree as well, launched its latest franchise property at Manali, as well as a 120-room property at Tirupati, Andhra Pradesh. Both of those will keep Lemon Tree in focus. Tamil Nadu Mercantile also in focus. Some SFT returns were not filed. Mind you, there was an IT investigation happening there. No implications on financial statements, though. That's a positive, and business operations will continue as usual. GHCL will be in focus on the back of resolution. Reappointment of Sanjay Dalmia as director of GHCL not approved by shareholders. That will be in focus. In terms of block deals, we have Credit Access Grameen, where promoter sold a huge block of shares. We have Adani Transmission as well, where GQG and Goldman Sachs both have purchased substantial stakes, and we have Eastmy Trip in focus, where Societe Generale has bought and Brikant Pitti has sold as well. So all of those in focus on our radar for the day.
Thank you, Harsh, for all those details on what stocks would be in focus today. But let's take a look at the change of management at LNT Finance, as Sudipta Roy will be assuming the position of MD and CEO with effect from Jan 24, 2024. And this is after Dinana Dubashi, who's the current MD and CEO, retires from the company. Vamakshi is here with some more details on this. Over to you, Vamakshi.
Well, yes, keep an eye out on LNT Finance Holdings. We do have Mr. Dinana Dubashi, who is the MD and CEO, who is expected to superannuate on April 30th, 2024. And in his place, board has approved the appointment of Mr. Sudipta Roy as the MD and CEO with effect from January 24, 2024. Now, let's look at Mr. Roy's profile in a little more detail. He is a consumer banking and payments professional with over 24 years of financial services experience. And in the course of years, he has developed a deep understanding of consumer finance, card and retail loans, lending and payments technology, systems, as well as associated risk management practices. He joins the company from ICICI Bank, wherein he was the group head, and in fact, he managed several diverse businesses out there. In the past, he has also worked for Citibank as well as Deutsche Bank. So that was it about the profile for Mr. Sudipta Roy. But what is the brokerage saying as far as its view is concerned? They're appearing to be quite positive with regards to this new appointment. They believe that it is in tandem with the company's endeavor to transform into a retail franchise, drive profitability improvement as well as ROA expansion. They believe that his extensive understanding of retail lending as well as technology could help achieve the stated objectives of the company, and in fact it could actually take the business to a much larger scale. Apart from that, when we talk about the valuation, the stock is currently trading at nearly 1.2 times FY25 price to book ratio, which when we compare it to the last 10-year multiples is actually coming in at a discount of almost 20%. And in brokerages are saying that this announcement could potentially lead to a re-rating of almost 1.5 times in the near term, and in fact they're also expecting a possible 2 times over the next 1 year. So largely it appears to be a positive coming in for LNT Finance Holdings as far as the management changes is concerned, and that is the reason you should definitely keep an eye out for this stock.
So much for that, Vamakshi. We will be keeping an eye out on that. But another stock that will be in focus today is Gujarat Gas. That's because the government has hiked the import duty on propane by a wide margin. Now, this could benefit Gujarat Gas as the street was penciling in a cut in propane prices. My colleague Somit takes us through all the details. Take it away, Somit.
Well, a big positive news coming in for Gujarat Gas, and that is the fact that government has hiked the import duty on propane for commercial use to around 19.25% from 2.75% given earlier. Now, the propane prices, because of this hike in import duty, is expected to now increase by around 4.6 rupees per SCM in the Morbi region. Now, from July, the propane prices in fact were expected to be cut to around 34 rupees per SCM, but now the same will increase and has increased in fact to 38.7 rupees per SCM. Now, this is compared to what Gujarat Gas charges for gas prices, that stands at around 38.4 rupees per SCM. Now, this is a big positive for Gujarat Gas because the increase in custom duty undermines the competitiveness of propane, which has been taking away market share from Gujarat Gas, especially in the Morbi region. However, from the month of August, due to seasonal weakness, the prices are expected to fall further. Propane prices, in fact, in the international market is expected to fall to around $400, which means that in Morbi region, the prices would stand at around 34.7 rupees. However, this is only for just 1 month. Going forward, again, the prices are expected to increase because the current price and fall in prices, in fact, is largely owing to seasonal weakness.
Well, thank you, Somit, for sharing the impact of the propane import hike on Gujarat Gas. But now shifting gears to the auto sector, the June auto dispatches have started trickling in, but the exports picture that looks quite gloomy so far. Harsh is here with all the details.
Well, yes, let's quickly look at the ones which are really doing well and, ones which have disappointed. We have Tata Motors to start off. Well, Tata Motors in that sense has done quite well, 18% month-on-month growth with regard to the total auto sales June. And, slightly above estimates as well. We are expecting 32,000 as the number of, vehicles sold. They've come in at around 34,000. So definitely a positive there. Let's quickly also look at Oisha. And Oisha on the VECV especially has done quite well. There's on the CV segment, Oisha has gone up 7% month-on-month in terms of dispatches. So that's a positive 6% year-on-year as well. Let's look at the ones which have disappointed as well. We have Maruti and Hero, both of which have disappointed. Maruti 10% lower on a month-on-month basis in terms of vehicle volume, 2% up, just 2% up year on year when I'm looking at that number. And in terms of where Hero is at, we also have 10% lower on a year-on-year basis, 16% lower on a month-on-month basis. So that's where Hero is at. Largely in line is Escorts, 8% up month-on-month, 2% down year-on-year, and that's where Escorts is currently placed at. But overall, it looks like a mixed set of numbers.
All right, then we'll move on. And brokerages have come in this morning, and my colleague Bamakshi has all the brokerage notes with her. Bamakshi, tell us, what are the brokerage notes saying? What are the stocks that will be in focus in today's trading session?
Well, yes, let's start off with Ultratech Cement. We have a note coming in from Goldman Sachs, and in fact, in the first quarter of this financial year, the company reported a volume growth of over 20%, which is much higher than the street as well as Goldman Sachs' expectation. The company continues to gain market share. However, Goldman Sachs sees limited upside for the sector, but important to note that for Goldman Sachs, Ultratech remains its top pick. So overall, they've maintained a buy rating as far as Ultratech is concerned, and also hiked their target price from 8,600 to 8,720 per share. Apart from that, keep an eye out on KPIT Technology. We have a note coming in from Goldman Sachs, and in fact, they're expecting a 5% quarter-on-quarter constant currency revenue growth as far as Q1 is concerned. Recent updates at Asian automakers indicate an upside risk that is related to electrification spending as well as preponement of electrification targets. They do like KPIT's exposure to rapidly growing EV as well as driverless car R&D budgets, and in fact on the back of this they've actually maintained a buy rating and also hiked the target price from 1,100 to 1,200 per share. And lastly, keep an eye out on MCX. We have a note coming in from Morgan Stanley, and they believe that the average daily traded value, that is the ADTV, is a key driver of MCX profit as well as share price. In fact, in the month of June, ADTV was up almost 12% on a month-on-month basis to rupees 58,500 crores, and that was mainly led by the option segment. So despite this update, Morgan Stanley has maintained an underweight call given a target price of 1,125 per share.
And that's all the time we have on this edition of Market Cafe. Thank you for watching and stay tuned to ET Now.